Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. To be fair, it wasn't that long ago when we looked at Fat Brands Inc., traded on NASDAQ under symbol FAT. But at Income Investors, we're all about opportunity. We would rather tell you about high dividend yield stocks with great near and long-term growth potential than simply write on different stocks to fill some kind of quota. And when it comes to Fat Brands, strong financial results and recent developments continue to make this an overlooked restaurant stock that one should watch carefully. John?
Yeah, thanks. You're correct, Mo. Fat Brands, the FAT, stands for A Fresh, Authentic, and Tasty, is a global franchising firm that owns 18 restaurant brands, including, and I'll just mention a few, Fatburger, Hurricane Grill and Wings, Ponderosa, and Smoky Bones. Has more than 2,300 franchise locations worldwide. Now, while most restaurants were running for cover during the pandemic, Fat Brands was actually expanding its empire, and it has continued to do so. Most recently, in September of 2023, Fat Brands announced that it acquired Smoky Bones Bar and Fire Grill for $30 million. This was Fat Brands' first entry into the barbecue category. And in mid-February this year, it announced it strengthened its foothold in Canada with plans to open 40 new Marble Slab Creamery franchise locations throughout the country. Now, the first locations are set to open in late 2024, and the deal will bolster the brand's presence from 100 stores to, I think it's 140 units.
Fat Brands recently reported a fourth quarter earnings and revenue beat.
Yeah, for the fourth quarter of fiscal 2023, Fat Brands announced that total revenue increased more than 52% year over year to $158.6 million. Now, Wall Street was looking for revenue of $150.4 million. The company improved its net loss to $26.2 million or $1.68 per share. And that's over a loss of the fourth quarter of the year earlier of $70.8 million, or a loss of $4.39 per share. It also reported an adjusted net loss of $1.15 per share, which was far better than Wall Street expectations for a loss of $1.21 per share. Now, for the full year, revenue climbed 18% to $480.5 million. And during the year, it opened 125 new stores. Looking ahead, management said it is seeing strong franchise interest in development opportunities, having signed more than 225 development agreements in 2023. That brings its total pipeline to 1,100 units. This represents potential, I think this is important, for over 50% EBITDA growth over the next several years.
This company continues to be a great high-yield income stock, declaring first quarter payout of 14 cents per share.
Yeah, every segment of the restaurant industry, from fast food to fine dining, is thriving well above pre-pandemic levels, and that is helping Fat Brands reward buy and hold investors with a growing dividend. In August 2022, it increased its quarterly payout to 14 cents per share from 13 cents per share. It has maintained its payout at that level since then. This works out to an annual payout of 56 cents per share for an annual yield of 7.3%.
How about Fat stock? I was reading it could double over the next 12 months.
Yeah, in addition to a reliable high-yield dividend payout, Fat stock has also been doing well. In 2023, Fat stock rallied 32.6%. It's also up 20.5% year to date, currently trading around $7.30 per share. The average 12-month share price target for Fat Brands stock is $15 per share.
John, thank you so much for your analysis. It has been a couple of months since we last looked at Fat Brands, and our opinion on the company has only gotten stronger. Fat Brands continues to be a great restaurant stock, growing both its restaurant brands and the number of global units. With more than 2,300 units worldwide, Fat Brands opened 125 new units and added a total of over 200 stores to its now 1,100 unit development pipeline, and expects to open an additional 150 units in 2024. The new additions are helping the company report strong revenue growth. Despite the raft of recent acquisition, management believes that there are significant opportunities on the horizon, which will allow it to integrate new brands and maintain a healthy and evolving pipeline of organic growth. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.